Good morning, everyone. It's a great pleasure to be with you. Thank you to Sia for the invitation and to be with you particularly in this magnificent setting. And before I start, finally, please forgive me for not attempting to give my presentation in Italian today. Okay, now I can use the mouse?
Okay, yes.
That one. Okay, technical issues resolved. Let's hope they can be resolved quite so easily for the regulation. In case anyone hasn't heard of the World Payments Report, it's actually in its 6th year, so 1 year more, I believe, than this splendid conference. It's a partnership between the Royal Bank of Scotland, Capgemini and EFMA, and in the course of the last 6 years, we've looked closely at the evolution in the European and global payments industry, and more broadly at the transaction banking industry. So if you've had a chance to see any of the previous reports, and I'm pleased to say there's a copy of this year's report, I think, in your conference bags. So any charts and diagrams that might be slightly hard to see on the screen today, you'll have the opportunity to study at leisure when you look within your bags. But the reports have covered a range of issues over the last 6 years. This year's report, okay. Sorry, technical issues at back. That one, okay. Okay, this year's report's in 3 parts. I'm going to talk to you about the first 2 parts, and then hand over to Bertrand, who's going to talk you through the last part. The report very much this year takes the form of almost a story. We look first at the trends in the global and European payments landscape, and many of the statistics and many of the pictures will illustrate and fit very well with the presentations you've already heard this morning from the earlier speakers. We will then talk about, and the second section of the report talks about the regulatory landscape. So it talks about SEPA, it talks about the Payment Services Directive, and then goes more broadly and looks at other initiatives like BAL 3 and some of the things we're seeing around anti-money laundering and KYC initiatives. And then the final section of the report, which is when I'll hand over to Bertrand, talks about the way that the payments industry is starting to evolve and how we're starting to see new competition and new collaborative and partnership models in response to the changes that we're seeing in the payments landscape. So, the first part of the presentation. This really is if you like, a good news story. And the good news story is that the payments business has withstood the crisis very strongly, and we're still seeing some very significant growth rates at a global and regional level, despite some challenging economic environments. If you look globally, non-cash payments, and again, this is a term that we've already used this morning, non-cash payments increased globally during 2008 by a total of 9%. The regional breakdowns are very interesting. So if you look at, if you take the US as an example, there was a growth rate of some 4% in use of non-cash instruments. If you look at some of the other countries, particularly some of the emerging markets, you'll see some very different statistics. So particularly, if you look within the BRIC countries, you can see some very high growth figures. Russia, up 66% is another interesting number. South Africa, 25%, and China, 29%. These are very significant growth rates. If you look for 2009 figures, and when the report was written, we didn't have access to full 2009 statistics, but the ECB kindly since then has published their regular review on stats. The trends continue. So we're still seeing very strong growth rates in the market, underpinned, as in previous years' reports, particularly by growth in card transactions. If you move on to the mix of different payment types, we're seeing some very interesting trends, and again, a continuation of the story we've seen over previous years' reports. Cards, as I already mentioned, really remains the engine for growth when it comes to non-cash payments. Cheques are generally in decline. There are still one or two countries, one or two regions where the cheque is proving remarkably popular still. One of those to date, of course, is my own country in the UK, but interestingly there's now a national initiative through the Payments Council which is seeking to completely eradicate the use of the cheque by 2018. So even in a very strong traditional cheques market, we're starting to see some movement. The other story really, and it's not illustrated on this particular chart, but we've heard it mentioned already in the context of the example of Italy, is that the use of non-cash instruments per inhabitant, per capita, also varies very widely between different countries and different regions, which is, again, for a whole variety of legacy reasons, and again, back to our main theme of the conference of SEPA, is one of the reasons why there are certain challenges in moving to a set of harmonised instruments when the place we're coming from is historically so radically different. If we look briefly at E and M payment markets, these are a real growth story. In a European context, if we move beyond the traditional SEPA agenda of credit transfers and direct debits, there are a number of E initiatives in the SEPA agenda, the e-SEPA agenda, and I know there are things that, for example, the ECB is very keen that they are taken forward. That's the e-payments, M-payments, e-mandates, and indeed e-invoicing, which, whilst it's not an initiative within the SEPA agenda, is very much something that builds on the SEPA core schemes. Outside of Europe, there is significant use already of non-traditional payment instruments. And there's also some interesting stories around the types of competitors that are emerging to the banks when it comes to the provision of these. The growth rates, particularly in the non-bank service providers, and this does apply in the EU also with the Payment Services Directive and the creation of payment institutions. And again, a previous speaker mentioned that the number of those varies widely by country. And certainly the UK to date has the largest number by far. I think it's almost 80% of, certainly of waived institutions and a fair number of licensed passporting institutions. So we're seeing a considerable growth in the number of non-traditional competitors, but also in their success. Having said that, even though the growth rates are phenomenal, as of, I think, 2008, they counted for something like 0.6% of the total global non-cash payment volumes. So a major growth story, but we need to put it into a little bit of perspective in terms of where it stands today as a percentage of the total. One last slide in terms of the quick tour of the trends in the world payment landscape. Cash. No presentation on non-cash payments would be complete without some reference to cash, because as you'll see from the chart, cash in circulation continues to increase. So yes, great success in terms of migration to non-traditional instruments, great success in terms of the building blocks towards SEPA, but we're still seeing cash circulation increasing. And there's a figure on the bottom of this slide, and I think it's already, again, been mentioned this morning, that there's a view that cash payments cost the EU economies something like 50 to 75 billion per annum. And this is clearly something where there's an opportunity in the future to address this trend and move more firmly into non-cash instruments.